Welcome back. Now, in times of market volatility and uncertainty, gold seems to be the perfect place to find value. And joining me as we assess the recent rally and how you can get your hands on the yellow metal is Head of Share Investing at FNB Wealth and Investments, Sebastian Pillay. Sebastian, thanks so much for your time today. And whenever I think of the gold price rally, I'm like, okay, it can't run past this mark. And I keep being proven wrong because over the past few months, we've really seen it break through record after record. And let's start there, just zooming in on gold's safe haven appeal, especially in these uncertain times.
100%. I mean, gold has been a diversifying portfolios for decades and will be for decades to come. I think the important fact to understand is, the correlation that it has with your current assets in your portfolio. If we just take a look back over the last year, gold has done around 38% in dollar terms and in excess of 40% in rand terms. And the reason why you see that deviation is obviously due to the weakening currency. But I think most importantly is that gold is obviously seen as that safe haven during times of high volatility, uncertainty, which is what we've seen actually play out now with the geopolitics between Iran and Israel. And I think this is a time where people are running to a safe haven asset, which is the precious metal itself, being gold, and is leading to the rally that we've seen over the last year.
And do you think that it still has more room to run? Because as we're mentioning, one thing we are sure about in this environment is that uncertainty remains the name of the game. And just looking over the past week or so, we have seen gains, but they've been somewhat contained.
Yes, over the last 3 months, returns have been relatively flat, but if you take it back over the last 12 months, it's a different story. And I think that's why it's quite important to understand is that when you're looking at including gold as an asset in your portfolio, you need to have a look at it holistically, right? And how it's actually going to interact with your other assets in your portfolio and why you actually want to include it. So some people might include it for short-term diversification. Some people want it for longer-term diversification. And depending on as and when we see the certain volatilities play out, I think it's important to note that there are points in time where your portfolio or your other asset classes will be doing good, and gold itself will probably be flat or not doing as well. And it's that diversification that you're looking to reduce overall volatility in your portfolio. Looking at how gold will do going into the future, I mean, still a lot of uncertainty in the markets. We see inflation has been coming down, interest rates have been cut. We see still a lot of geopolitical tensions across the Middle East. We're not sure what US will do in regards to the conflict itself. So there's still a lot of that uncertainty. So I do think there will be quite a bit of volatility in the short term. In the longer term, I think it's quite difficult to predict. But having said that, I think having gold as part of your portfolio, regardless, is still something that's worth considering. And especially over the long term, you've seen the benefits and the diversification that comes through.
And let's talk about that now. Just having gold in your portfolio, I'm sure many are looking to add gold if they don't have it already. But I guess the confusion here is around how do you access gold? What's the best way? Through an ETF, through gold mining counters on the JSE, through Krugerrands?
So that's an excellent question, right? And a lot of people think, just buying a gold miner or gold ETF or Krugerrand is all going to give you the same kind of diversification and exposure. In fact, it's actually couldn't be any more different. If you were to buy a gold miner, you buy in the company, you buy in the management, you buy in the governance structures, you buy in all the issues that come along with that specific company, where it operates. So you're not just getting direct exposure to the asset itself. So one needs to take into consideration, yes, I'm going to get some diversification or some exposure to gold, but I'm also going to get a lot more. So is my risk appetite aligned to that? And is that a strong enough company within the sector to even generate the value that you're looking for? Then getting access to gold itself directly, a good option would be, example would be the ETFs. You're getting direct exposure to the metal itself. And that's where I mentioned you're going to get excess of the last year, we've seen close to 38% or 40% in rand terms. And that's tracking gold directly. with none of the exposure to the company itself. The great thing is that you also have one of our local favorites, which is the Kruger Rands. And that gives you yet again another direct exposure to gold and the diversification benefits of it. The great part about it is that you don't pay any VAT on the asset itself compared to if you were to buy something like an ETF. You could take physical custody of it, or you could have it in custody with the likes of FNB. FNB provides the ability for you to purchase Kruger Rands on our platform, held in custody, or even take delivery of that asset. So there's a multitude of ways that one can get access to the asset class. It just depends on what you're trying to achieve, and what you're trying to achieve, and how you want to get exposure to the asset.
Would you say then also, just the investor's risk appetite comes into play here? Because it does seem like investing in a JSE gold counter is a bit more riskier than exposure to the ETF and the Kruger Rands, particularly when it comes to just risks that apply to just operating a business in South Africa. Those miners were dealing with load shedding at some point. We have issues at the ports, etc., etc.
Most definitely, I think the risk profile of a miner or counter that's listed first is getting that exposure to the asset is multifaceted. You've already alluded to the fact that you've got load shedding, you've got labor unions and labor unrest, you've got a multitude of factors that you need to consider, and then the exposure to gold itself. You've got to look at how much is actually weighing in light of the company. I mean, some of the gold miners you look at today, some of them have done exceptionally well. Some of them haven't even done as well as the asset itself. So you need to look at why you actually would want to choose the gold miner. If your main purpose is just to get exposure to gold, then you're better off doing it via one of the ETFs or directly via Kruger Rands.
You know what's been interesting, Sebastian, in the commodity scene is particularly what we've been seeing when it comes to other precious metals, particularly the uptick we've been seeing in platinum prices and silver prices, especially as gold remains at such high levels. Does that safe haven appeal have legs to stand on? Is it sustainable?
So if you look at platinum's run quite hard in the last month. I think there is a bit more use for platinum within the sector itself. But whether it's sustainable or not, I think it's, if you look at retailers or institutions, if gold has gotten too heavy, it's gotten too expensive, and we walk down the curve and say, are there alternative assets or metals that can give us similar diversification and exposure without a lot of the volatility that we've seen currently with some of the equities? So yes, there is an optionality in the likes of silver and platinum, but does it stack up in regards to giving you the benefits of gold? And I think gold is something that's synonymous around the world, whereas if you go to many other countries, platinum and silver might not be. Platinum has a bit more commercial viability, and if we're seeing a bit more uptake in those sectors, so yes, a lot of that benefit does come through. But if you just compare them like for like for the last 2 to 3 years, you will see that gold has outperformed significantly in relation to that.
So all that glitters is definitely gold. Sebastian, thanks so much for your time and sharing those insights. That was the head of share investing at FNB Wealth and Investments, Sebastian Pillay.